Hi, it's Nero here from Investment Rise, and even as we are stuck in lockdown in Sydney and Melbourne and yes, other parts of the country, property prices are continuing their almost unstoppable rise. However, despite the fact that property prices are continuing to rise, I am seeing headlines like this. Aussie house prices up 16% in a year, but are losing steam. Australia's climbing home prices keep climbing, but new CoreLogic research shows prices are tapering as housing becomes less affordable. So the question is, does that mean that house prices are about to fall? Have you missed out on the property boom? Now, many of the trolls who like to leave abusive comments below my videos will absolutely have you believe that, yep, the end is near, property prices are about to crash and they'll go through the floor. Right now, if you're watching this, hopefully you're not someone who takes advice from anonymous, unqualified trolls. So let's have a look at the actual data. And let's begin by looking at the CoreLogic Home Property Value Index monthly indices. And let's look at Sydney. And this is for property price growth up until the end of July. And what we can see is, if we focus on the column that says houses, Sydney house prices have risen 22.98% in the 12 months to July 31 of 2021. Okay, now that growth rate far outstrips the growth rate on units, which is only sitting at 7.58%. Okay, so let's focus on the rate of price growth in houses. Now, in Sydney, the median price for houses is 1.4 million, according to CoreLogic. Now, as we saw earlier on, prices have risen by about 22% in the 12 months to July 31. Now, if that was to continue for the next 12 months, and to keep my numbers easy, let's say that property prices rose by another 20%. Now, 20% of 1.4 million is $280,000. That would mean that in 12 months' time, house prices, the median house price in Sydney would now be 1.68 million. And then if we take another 20% or so, that would mean that house prices would rise by more than $320,000. And that would mean that in 2 years from now, the median house price in Sydney would be $2 million. Now, do I think that's going to happen? Absolutely not, right? These kinds of significant growth that we've seen, for example, in the Sydney market, that is unsustainable in the long term. I do not believe you're going to see 20% growth in the Sydney market year on year going forwards. But what if you only get 10% growth, say in the next 12 months? So if you bought a median price properties for 1.4 million and you only in quotation marks I say, you got 10% growth, that would be another $140,000 that you made. Would you be happy with that? Look, I certainly would, right? So that's where I think some of these headlines that are talking about, oh, the rate of price growth slowing can be misleading, because it can sometimes lull you into a sense of, oh, should you wait and, are prices about to fall? No, not at all. It just means that prices are going to rise, but they won't rise as fast as they have in the 12 months to date. Okay. Now, mind you, these affordability issues are only starting to bite in really Sydney and Melbourne, which are our two most expensive markets. And the problem with these headlines is they are nationally based, but they are skewed by what's happening in Sydney and Melbourne because they are our two biggest markets. So yes, the rate of price growth might be slowing in the house market in Sydney and Melbourne. We're not even talking about the unit market here at the moment. I certainly think that buying a unit right now is a bad investment choice for a whole variety of reasons. So you need to stick to houses. So if we focus on the house market, yes, Sydney and Melbourne might be slowing down, but that doesn't mean necessarily that everywhere else in the country the rate of price growth of houses is slowing down. In fact, let's have a look at this article here. This is from the Domain, and it says, Australian housing market entering tricky territory as affordability starts to bite. And this was written on the 25th of August 2021. Now, it says the Australian housing market is heading into tricky territory as coronavirus-related lockdowns intersect with the issue of soaring house prices and affordability, a new report reveals. Now, the report then goes on to say that affordability has become a major concern in Melbourne and Sydney. Both cities are in lockdowns, but have also had house prices soar to record levels over the past 12 months. The article then goes on to say, though they had seen major house price hikes, other capitals had further to move before their markets faced similar affordability and lockdown issues to Sydney and Melbourne, he said. The other markets are a long way from being somewhere similar, Mr. Hassan said. And Mr. Hassan is a senior economist for Westpac. So as an investor, I think it's a tricky market, as that article said, because you no longer can you just buy blind. I mean, look, you can just throw a rock and buy wherever it lands. And if you stick to buying houses in a capital city, odds are you'll make some money. Okay, but if you're willing to put a little bit of effort, if you're willing to get some professional guidance, you will find that there are markets that are performing better than others. And if you're willing to do your research and not just buy where maybe your friends and family bought it a year ago, what you'll find is that you will uncover markets that are going to outperform others, and that those are the markets that are going to give you the best chance for capital growth. And I certainly think those markets are going to be outside Sydney and Melbourne for most investors. I say most investors because the wealthier suburbs, the premium suburbs of Sydney and Melbourne, look, they still are going to outperform almost everywhere else, right? There's a ridiculously low amount of supply relative to the number of buyers who can afford those kind of price points. I'm talking about $5, $6, even $10 million price point suburbs. So those suburbs will still grow significantly. But for most average investors who are looking for prices and property priced around $1 million or less, I do think that their best potential for capital growth going forwards is going to be to look outside of Melbourne and outside of Sydney. And look, if you're still worried about affordability on a national basis, because yes, house prices have risen almost everywhere, well then check out the following chart. This shows the Australian household debt repayments, and the sources are the Reserve Bank of Australia, RBA, and BIS. And what you can see here is this graph shows, or this chart rather shows, the ratio of household disposable income. And what you can see here is with this green line is that in 2021, the ratio of household disposable income spent on a mortgage is as low as it was back in about 2007. So 14 years ago, right? Some might even say it might be as low as 2003, but let's just say 2007. Now, I remember back in 2007, because I was investing back then, house prices were less than half of what they are in many parts of the country today. And yet affordability right now is as good as it was back then. Okay, now that's on a national level. Now, of course, those affordability ratios are not as good in Sydney and Melbourne, but it only goes to reinforce my point that going forwards, different areas are going to perform differently. So are property prices about to fall? No. No, not at all. We're a long way from the peak yet. Now, of course, the rate of price growth is probably going to slow in Sydney and Melbourne, but a lot of our capital cities outside of Sydney and Melbourne are still showing a lot of potential for property price growth. In fact, some areas price growth is actually accelerating. And if you do your research and you can invest in those markets that are showing stronger capital growth than others, you are in a great position to grab yourself a good chunk of capital growth between now and in the coming few years. Not just good capital growth, but also some strong cash flow returns. So I really hope you do your research and take advantage of what I believe is a great opportunity for investors going forwards. Hey, thanks so much for watching. If you found this video valuable and you're thinking you might like my help to help you find an investment property, then head on over to nerocall.com to discover our unique 5-step process that's helped my private client group purchase now well over $66.2 million worth of property. And then if you like what you see, you can book in for a half-hour phone consult with me personally. Either way, thanks again for watching.